Oliver, you and I were talking there just before we went on the air. You said that you were looking for something a little different after that world supply and demand estimate that was released.
Well, the reaction that the market had was pretty encouraging, specifically in the corn market. And we rallied pretty good, and we were hoping to get some follow-through yesterday and today, but we just haven't been able to do that. That has kind of put a damper on things here in the very near term. But if you kind of broaden things out and look where we've been trading over the last couple of months, we really haven't gone anywhere too fast. We marked those contract lows at 309 back on April 21st, and since then it's just been a slow grind sideways. 416 to 417 is a pivot pocket. If we do break and close below there, potentially we go retest those contract lows at 309. But I'm pretty confident that we can see us stabilize around this area and get back out above 320 to 325. And if we can do that with some conviction, I think that's where you start to get a little bit of short covering from the fund. As of last Friday's Commitment to Traders report, have a short position of about 190,000 contracts, which is a big position at any time of the year, but especially at this time of year when there's so many uncertainties still lingering over the market. If we get some good technical closes, that could be enough to spark some short covering.
Not only technical closes, but what about ethanol? If we would continue to see some of these ethanol plants open up, maybe this crude oil market continue to take a little bit of firmness here, would that bode well? Speaking of crude oil, by the way, we are up $2.07 on the June contract. Would that go a long way in maybe helping this corn market firm?
You know, I do think it would. Yeah, we saw good exports this morning. That's good. We need to see that continue to be a trend. The energy sector continues to firm. As you had mentioned, we've got June crude up about $2 or 8%, and that's a good sign as well. And we've been hearing that ethanol plants are going to be coming back on, and it kind of draw some similarities between what's going on here with the ethanol plants and what's going on in the livestock markets. We kind of chewed through a lot of the bad news. A lot of the bad news is probably priced in, and the markets are forward-looking. So I wouldn't be surprised to see the market start to look forward a little bit more and see some optimism now that we've got past this peak panic over the last couple of months.
Crude oil just slightly higher, and diesel fuel today is up 5, almost 6 cents on the June contract at 89 cents a gallon. We'll be back in just a moment.